Okay guys, so we're back on the channel with another questions and answers. I ask for questions pretty much every single month on my Instagram, and in the past I used to do a monthly Q&A. So we are starting back with this monthly Q&A and it will be ongoing. So if you want to ask me questions, then be sure to follow my Instagram so you guys can ask a question next time, and I'll make sure to answer it in the following Q&A on the channel. If I didn't get to answer your question, maybe leave it in the comments down below and I'll try to answer as many as possible. But like I said, if I don't manage to do so, be sure to comment on my Instagram for the next Q&A section. So moving on to the first question, and the question is making 20% to 25% profit per year enough? I feel like a lot of people actually ask me this, like, am I making enough profit? How much do I aim for each month? Because of social media and how people expect to make really high percentages nowadays. I think that making high percentage was actually kind of made popular from SMC traders when they're posting their 1 to 100, 1 to 200 risk to rewards. Obviously this isn't realistic and consistent. I don't really know any trader which can actually do this consistently. And if you're following a good trader, they will tell you that even if you make 15% in a year, 20% in a year, you're making more money than the majority of hedge funds. It doesn't seem like a lot because your account size will be a lot less significant compared to these hedge funds. You know, they are trading hundreds of millions, billions of pounds in capital. So it will seem like you're not really making much profit. Even on a 100k account, making 15% in a year is only 15k. Once you take into account profit splits, tax, and then all your expenses, it's not really a lot of money at the end of the day. So you just got to base it off of percentage wise rather than the monetary side of trading, which a lot of people actually end up doing. So if you're making 25% in a year, obviously that's just over 2% per month. If you're trading on a 400k funded account, you're making 6 figures in a year, which I think most people would be okay with making. Making 6 figures just from trading, it's very nice. Whereas if you're making 25% on a £1 million account, you're then making £250,000, which obviously after profit splits, tax and everything is going to be, you know, 150, 200k, which you're actually left with after all of that, which again, most people will be very happy with. What a lot of people don't have £1 million in funding, but this is possible to get to. The people that ask this question are usually people that are trading with £1,000 in their account, £2,000, £10,000, and making 25% in a year, you're only making 2.5 grand. It's not even enough to live off. That's like the average monthly salary in, you know, the majority of countries. So it does seem a lot trickier to make this high percentage and not really see the returns in the monetary side of it. But if you do that consistently, you can either get investor funds or you can use that to leverage it from either compounding or with funding companies like prop firms. So the second question is, do you share the trades you take anywhere? And I guess by this you mean signals, and the answer is no. I don't actually offer signals, but I do have, obviously, in my mentorship group where I teach people how to trade, and obviously there are recorded Zoom calls in there. There's a Discord group and trade breakdowns from the trades I've actually taken. And I do have a Telegram group, you know, just a monthly payment where I share my daily analysis on GBP USD. Obviously GBP USD is the only pair I trade. Back in the day it used to be gold, GBP AUD, GBP USD, even US 30 mixed in there as well, but now it is solely GBP USD. So my analysis is in that group. If you want to check out either of these, there's a link in the description. Next question is, any advice to deal with real money trading, profitable on demo? So a lot of people actually ask me this. They've started a demo account, they're profitable, they've managed their risk correctly, everything is going smoothly, but they aren't able to translate this into trading with real money or live money on a live account. And I think the main thing to sort this out is to start trading live as soon as possible. So let's say you're a beginner trader, you started last week, last month, and you've been advised to trade on a demo account. I think this is terrible advice. Obviously for the first week or so to get used to the platform, this is okay. But whilst you're actually actively trading, I think it can be detrimental towards your future trading, because you want to develop your psychology from the very start. And if you're not trading with hard-earned money from the very start, then it's going to be a lot harder for you when you eventually go onto a live account, because you're not used to trading with money that's coming out of your pocket. So if you put £1,000 into a demo account, obviously it's demo money, so it's not your real money. Whereas if you put £1,000 into a live account, if you lose that account or blow the account, £1,000 of your net worth or your total capital is now gone. You feel it a lot more, so you're more inclined to use proper risk management and not risk the whole account in every single trade. So if you're struggling, if you're profitable on a demo, this is obviously great. It shows that you can trade. Your strategy might be working well, but your psychology just isn't quite there. So maybe start with a smaller live account at the start, just to get used to trading with your live money. And then if you are profitable for maybe 2 months, then you can maybe add a little bit more to the account. Let's say you start with £1,000, you can then top it up to maybe £2,500, £5,000, depending on obviously the amount of money you have. You don't want to just then stick in all the money you have to your name, be total disaster. And you should never trade with 100% of your money, which you actually have. You know, I personally trade with, well, probably less than 25% of the money I actually have, you know, as my overall capital, because I have other investments, I have other businesses. You know, I like to buy watches, and obviously trading is a large part of my business and my life, but I'm not going to stick all of that into a live account and trade it. There's other investments which are still returning similar returns from my actual trading with no work required. So actively trading, especially prop firm accounts, it's a good one to get into, but once again, you're not testing your real psychology because it's not real money on the line. I guess you could say with prop firms and the funded accounts, you actually get a payout, but you're getting paid out demo profits. So you know that if you lose 5%, 10% and the account's blown, that you can just restart firms, but then they can't actually trade their live account. If you are in this situation as well, so obviously this guy was profitable on demo, but couldn't trade live on his real money, that's where you should start small and build your way up. But if you're profitable on a funded account, getting consistent payouts, but you can't actually trade real money for yourself, just trade a prop firm and copy trade to your live account, or trade your live account and copy trade to your funded account, and see how this works. Do you start taking different trades? Do you start acting differently when you're actually in profit, in a loss, or in drawdown? Just note this down. On every single trade you take, how do you deal with it? Because obviously you now know that your real money is on the line. So do you react differently? Another way around it is to simply just trade the account separately. So trade your funded account like you would normally, and trade your live account like you would trade your funded account, because obviously if it's profitable and funded, then you should be profitable as well on your live account. So the next question is, how are you able to stay disciplined with only trading one pair? And I feel like the main reason why I'm actually able to stay disciplined is because I know it works. And from all the testing I've done, obviously I tested GBP USD, XAU USD, AUD USD and Euro USD. So when I was picking the 4 pairs which I was actually looking to trade, those were the 4 that I tested. And obviously gold was quite profitable, but GBP USD was the most profitable. And why would I be tempted to trade these other pairs when I know, statistically speaking, for my strategy, for my style, for my trading ability and my trading style, that this is the most profitable pair which I've actually tested for myself. You know, on my watch list, I only have GBP USD. On my timeline for timeframes, I only have 15 minutes. If you're limiting yourself to not even see another pair on your watch list, you're not going to be tempted to click on it. So if you're only trading one pair, I've never actually had the need to even open, you know, the sidebar in your trading view for the watch list, because as soon as I open my chart, click on TradingView or type in tradingview.com, I'm straight on the pair that I've actually wanted to see and analyze anyway. Because if I know it works, why change it? You know, like the saying, if it isn't broken, why fix it? Simple as that. There's no need for me to jump onto gold and take a quick trade because I know that it's worth waiting for a trade on GBP USD. What you have to do in this situation, if you are tempted to trade another pair or trade another time frame, trade another setup, just go back in your results, in your testing, in your back testing, in your journal, and just look at the profitability. So if you're trading GBP USD and it's profitable, you traded gold before but it's not as profitable, the proof is literally right there. Why would you possibly want to trade gold if it makes you less money than GBP USD does? It doesn't really make sense. So what I do is I rely on my statistics and data that I've actually collected in the past to then reinforce the fact and what I already have in my mind that this is the best pair that I should actually be trading, and it is the best for my personal trading. Doesn't matter what anyone else is doing. Someone else could say, oh, well, WillssFX trades GBP USD the most, so I've got to trade that the most. But this obviously isn't relevant because it should be individual to your trading strategy. So the next question is, how do you deal with revenge trading after a losing streak? You know, I've had a lot of experience with this in the past. You know, let's say like 2 years ago, I used to have this quite a lot. So I'd be trading, you know, at the time I was trading a £7,000 account. And what I'd do is I'd trade this to £15,000 or £20,000. And, you know, I actually got advice to do this from someone that, you know, a very, very good trader. And he said that's what he does. And it just means that he trades it like it's a bigger account, but there's obviously less actual balance in the account. At the time I was using 1 to 500 leverage. It didn't really matter about the leverage which I was actually using, and the trades I was actually able to take, I was able to risk more than 1%. But obviously when you're doing this, you can get a lot of losers, and it does build up to a high percentage of the account balance. And I was always tempted to revenge trade, make back those losses straight away, and just try and get back to break even or back into profit on the account. So what I did, the best way to actually fix this is to simply lower your risk. I'm not saying that if you go on a losing streak, you should then lower your risk to then get back into profit, because I strongly believe that you should stick with one amount just based on simple maths. So if you're actually struggling with this and you struggle with revenge trading, to make it easier to handle losses, you just simply need to lower your risk. So let's say you're risking £1,000 per trade on a £100,000 account, and you're risking obviously the £1,000, you take 4 losses in a row, and this kind of doesn't really sit right with you. You're kind of struggling. Maybe it's a prop firm account and you don't like being 4% in drawdown. Let's say you trade it again and you get back to break even. Now what you need to do is simply lower your risk, because if you're kind of revenge trading because of a losing streak, it means that you can't deal with drawdown on the account. This could be numerous different factors, but majority of times with people I've seen in my mentorship is because they can't deal with being down a certain amount of money. So in trading, there's obviously barriers that which people hit, and it makes them not as successful as they should be. And one of these is monetary value in the trading account. So I know a lot of people where they're trading an account, let's say it's a 70k account, for example, and they've traded the account, they're running up the profit, and it's almost at 100k. This will then be a mental barrier. They want to get above 100k. So they'll do everything they can to get to 100k. Once it's at 100k, they'll close up their positions, and then boom, they're at 100k. If they take a few losses, then they're then below 100k, so they've got to trade it back up to get to above 100k, because that's the new low point which they actually want to aim for. And you're kind of trading always around trying to reach this value on the account. So if you actually are in drawdown after a losing streak, you then want to get back to the point you're at before this losing streak. Whereas if you lower your risk, you're obviously less in drawdown, so you're seeing less money lost on the account. Granted, the wins will also be smaller too, and it still takes the same amount of percentage gain to actually get back into profit, but it does mean that you can handle it better, because instead of seeing 4k down, you only see 2k down. So you're seeing half the losses on the account. Obviously it's the same percentage wise, but this could help if you are struggling with seeing high drawdown monetary wise on your account. So following on from that question with one which is actually quite similar, and they ask, are you numb to the profit numbers on your screen? So I'm guessing you're talking about seeing high amounts of profit, so tens of thousands. I've had $50,000 days whilst trading, and I feel like it doesn't really faze me at all now. There's going to be times where it does feel like, oh, this is quite a bit of money in profit right now, but it doesn't really faze me, and I'll tell you guys why. Outside of trading, I have numerous other businesses. I have numerous sources of income. If you think about it, this YouTube channel alone on average brings in more than an average UK salary. Obviously I live in the UK, it makes more than average UK salary. And out of all the income sources, trading is obviously one of the main ones. If I'm making 50k days, it's pretty crazy. And I've had some really big months trading prop firms. I remember one month I think it was in June, I made 27% profit trading prop firms, obviously all recorded live, which if you watch the channel, you should have seen. I think I had like $52,000 worth of withdrawals, making 27% on a 200k account. Very crazy. Obviously back in February, I had a 50k day. These are big days, and if you're up 50k for the day, you obviously get affected by it a little bit, and obviously that's a lot of money compared to the account sizes. If I'm up like 5k, 10k, 20k, this doesn't really affect me at all, because outside of trading, I have a lot more money compared to what I'm actually up in profit. And once you reach a certain point in your life or a certain amount of money, you're kind of used to seeing it. So let's say you're working a normal job when you're 16, you make £5 an hour, let's say, for example. That's your new normal. Then you work a new job, maybe you turn 18, you turn 20 years old, you get a full-time job, now you're making £20 an hour, £25 an hour. That is now your new normal. It might seem a lot at the start. So obviously once I started making my first 10k day, my first 5k day, my first 20k day, this is obviously going to be a shock to the system. But then once you've had 30k days, 40k days, 50k days, and then you see 5k profit or 20k profit, it just doesn't really affect you as much because you've seen it before. It's happened to you before. It's not something new that is actually happening. So you're kind of accustomed to seeing larger amounts of profit on your screen. And if you are trading larger account sizes, then you'll have to get used to this. That's why I always advise people, if they are going for prop firms, don't go straight in the deep end. Don't go straight in with a 400k account or a 600k account. And people asking these questions probably deal with the same sort of issues. You're going in the deep end. If you just learned to swim, you wouldn't go straight in the deep end. You start in the shallow end, you work your way up. My first prop firm was a 25k account. I built it up obviously, then I did a 70k, then I did a 100k, then I did a 200k, and then I was trading, close to $1 million in prop firm capital. And I reckon if I didn't start with that 25k account, I think I made like 10% profit. It was like 2k. I was very, very happy at the time. And then I went up to a 70k account, and obviously 10% is then 7k. So it's a relatively big jump. But with prop firms, you're quite limited to what you can actually choose. You can't choose like an extra 10k account size every single time, but just go up one step each time. A lot of people, they start on a 25k account, they make 5% profit, and then they're like, oh, well, if I did this on a 200k account, it would have been this much instead of this much, and this is how much money I could have made. And they just get drawn in with the large amounts of money. So if you want to deal with the big profit numbers on your screen and become numb to them, build your way up. Make it the new normal, make it so you're used to seeing this, and not just jump straight in the deep end, going from seeing £100 profit to tens of thousands of pound profit. This will be highly detrimental to how you react to these large numbers on your screen. So next question, where have you been in the past few months? And you guys have probably noticed I haven't really posted much on the channel recently. This is because I guess I've just been living life. I always preach that if you want to become a trader for the lifestyle, don't just sit at your screen all day, 20 hours a day, and work for less money than you would in a normal job. Doesn't really make sense. Obviously you get the freedom, the trader lifestyle, but a lot of people never actually get to live this because they're stuck trying to trade every single hour of the day. It can be very dangerous. So I went to Barcelona, I went to the Netherlands, I went to France, going to Canada, quite a few trips. Obviously London numerous times. I love going to London. Obviously in the heat in the summer it isn't great, but we've been on a few trips, been playing a lot of golf, a lot of tennis, and I guess I've just been living life. Haven't really been posting much, but now the next few months, what it's like in winter, when it gets a bit colder, that's when it's time to grind. Make sure you guys are subscribed with notifications on so you never miss a video. But yeah, if you are making profit and making money in your business or from trading, make sure you actually enjoy it. There's no point making all the money if you never enjoy the money you've made. Because if you think about it, what's the point in making the money if you never actually benefit or reap the rewards from all your hard work? So the last question of the video, how to pass a prop firm when you have to make 10% profit target if you can only make 2 to 5% monthly. And I feel like if this was 6 months ago, a year ago on the channel, I would have given a different answer. But nowadays, probably 90% of the prop firms out there don't have a time limit. So if you can only make 5% in a month, just trade for 2 months on the account, on 2 months on the challenge, because then you can pass it. You can trade how you normally would. You don't have to up your risk. You don't have to rush your trades. You can trade exactly like you normally would, and you can still pass the prop firm. If you want to pass it quick, like most people do, obviously the only way to do that is to up your risk or change your strategy, which you don't want to be doing because you can lose trades as a result of this. But if there's no limit, you don't have to pass in 30 days, you don't have to pass in 60 days. Even if you make 2% per month, 5 months technically, you can pass the prop firm. You can pass the challenge. So there's no rush nowadays. Obviously what's going on with my Forex funds and everything, people are wanting to pass and get their payouts quickly. But if you can't make high percentage profits, obviously making 5% on a funded account is amazing, more money than the majority of people will ever make in their lives. So just take it slow, be patient, and trade how you normally would. And because there's no time limit, you guys are pretty much sorted anyway. So if you guys did enjoy, like the video, subscribe, comment down below any questions I may have missed, and I'll catch you guys next time.